The Central Bank of Nigeria says that the Nigerian banking system remains stable and resilient as a result of stringent prudential guidelines it has put in place. This is coming on the heels of the risk of a global financial contagion from the recent bank failures in the United States and Switzerland. The CBN is also optimistic that the Nigerian economy will continue on a moderate growth trajectory of about 3% this year in spite of upward inflationary pressure and rising cost of debt and debt servicing, setting the benchmark interest rate in the country at 18% during the bi-monthly MPC meeting which held earlier in the week. We have details of that in today's episode, plus highlights of the 2023 Global Money Week as commemorated by the bank in Abuja, all after the short break. Stay with us.
I see. Just hold on in that case. Let me call out my PIN. It is 41...
Uncle, please stop.
Stop what?
You're giving someone else your personal identification number PIN?
Not someone else. It's from my bank.
Please hang up, Uncle. That's a fraudster.
That's not true. But they call out my full name. I am sure this is from my bank.
Uncle, no bank is ever going to call you to ask for your personal identification number PIN, your mobile banking password, or your card verification code, CVC.
But it sounded so genuine.
Yes, hackers and fraudsters always sound genuine. But please, Uncle, don't fall for their bait. Don't respond to any phony emails, text message, SMS, and don't click on any link you're not sure of.
Even if they call your date of birth or your BVN, don't give them your security details.
If you suspect any issue with your account, please go to your bank.
Oh, I see.
This message is from the Central Bank of Nigeria.
The Central Bank of Nigeria's Monetary Policy Committee met for the second time this year on Monday 20th and Tuesday 21st of March at the bank's headquarters in Abuja. The committee's 12 members in attendance assessed key risks to the global economy associated with the new and existing headwinds, as well as their impact on the Nigerian economy and the outlook for the rest of the year. Identified headwinds threatening full recovery of the global economy include the recent bank failures in the United States and Switzerland, persisting high but receding global inflation, continued hostilities between Russia and Ukraine, and its implications on the smooth functioning of the global supply chain, lingering risk of resurgence of several variants of the coronavirus, which persist after China set aside its zero-COVID policy. Also, the deteriorating relations between US, China, Russia, and some major oil producers in the Middle East continue to increase volatility in the oil market.
Across several emerging markets and developing economies, inflationary pressure has remained high, due largely to rising energy prices, higher prices of grains, and exchange rate pressures associated with capital flows to high-yield US dollar-denominated assets. In the global financial markets, renewed fears of a global financial contagion are forcing investors to move away from the equities market to safer assets such as gold, while others seek higher returns in treasury securities with improved yields. With the several advanced economy central banks progressing with monetary policy normalization, global financial conditions will likely remain tight, thus reinforcing the reassessment of financial portfolios to reflect the risk aversion of investors.
In the domestic economy, the committee noted that output recovery progressed at a relatively moderate pace, while headline inflation trended upwards, though less aggressively, as a result of a marginal increase in food inflation. Nigeria's banking system remains stable. There was sustained improvement in the equities markets during the period under review, but external reserves declined marginally.
Data from the National Bureau of Statistics show that the real gross domestic product (GDP) grew by 3.1% in 2022. The improved performance was driven largely by sustained growth in the services and agricultural sectors, rebound in economic activities associated with economic recovery, and continued intervention in growth-enhancing sectors by the bank. Staff projections showed that output growth recovery is expected to continue into 2023 and 2024. The committee, however, observed with concern the marginal increase in headline inflation year-on-year in February 2023 to 21.91% from 21.82% in January 2023, a 0.09 percentage point increase. This increase was attributed largely to a minimal rise in food component to 24.35% in February 2023 from 24.32% in January 2023, while the core component moderated to 18.84% in February 2023 from 19.16% in January 2023. The shocks to the food component were driven by the high cost of transportation of food items, lingering security challenges in the major food producing areas, and legacy infrastructural problems which continued to hamper food supply logistics. The committee noted the continued stability in the banking system reflected by the performance of the financial soundness indicators. The capital adequacy ratio stood at 13.7%, non-performing loans NPL ratio of 4.2%, and liquidity ratio of 43.1% as of February 2023. The committee, however, noted the marginal decline in the level of gross external reserves to $36.13 billion in February 2023 from $36.14 billion in January 2023, a decrease of 0.7%, reflecting the downtrend in crude oil prices as global uncertainties persist.
The committee reviewed the performance of various interventions of the CBN aimed at stimulating production and productivity across the real sector.
Between January and February of 2023, the bank disbursed 12.65 billion naira to 3 agricultural projects under the Anchor Borrowers program, bringing the cumulative disbursement under the program to 1.09 trillion to over 4.6 million smallholder farmers cultivating or rearing 21 agricultural commodities on an approved 6.02 million hectares of farmland across the country. The bank also released the sum of 23.7 billion under the 1 trillion naira real sector support facility to 8 new real sector projects in agriculture, manufacturing, and services. Cumulative disbursements under the real sector facility currently stands at 2.43 trillion disbursed to 462 projects across the country, comprising 257 manufacturing, 95 agriculture, 97 services, and 13 mining sector projects. Under the 100 for 100 policy on production and productivity, the bank also released 3 billion naira under the Nigerian Electricity Market Stabilization Facility for capital and operational expenditure of distribution companies (DISCOs) aimed at improving their liquidity status and aid their recovery of legacy debt. This brings the cumulative disbursement under the facility to 254.39 billion naira.
In its outlook, the MPC projected that the Nigerian economy will grow by 3.03% in the year 2023.
Available data and forecasts for key macroeconomic variables for the Nigerian economy suggest that the domestic economy will continue to recover for the rest of 2023 at a moderate pace in light of evolving and persisting shocks to the economy. The continued upward pressure on inflation, rising cost of debt and debt servicing, as well as deteriorating fiscal balances remain headwinds which may undermine the smooth path to a faster recovery. Accordingly, Nigerian economy is forecast to grow in 2023 by 3.03% CBN estimate, 3.37% federal government estimate, and 3.2% the IMF estimate.
In reaching its decision on key monetary policy parameters for the next 2 months, the MPC discussed the recent bank failures in the US and Switzerland, which occurred due to persistent rate hikes, careful to shield the domestic economy from emerging shocks from the global economy and sustain its focus on domestic price stability.
Following new risk of financial contagion emerging from the scenario of failed banks in some advanced economies, members examined critically the possibility of shocks to the Nigerian banking system from these banks and concluded that the Nigerian banking system remains reasonably insulated from such likely contagion. The bank has been able to achieve this through stringent micro and macro prudential guidelines that has ensured that individual banks and the banking industry in Nigeria have adequate buffers to ward off global contagion. In addition to this, MPC examined the possible impact of further policy rate hikes on the stability of the banking system and was convinced that further rate hikes would not adversely impact the stability of the banking system. Committee, however, called on the bank's management to strengthen its regulatory oversight on the banking system to ensure that the banking industry remains stable and resilient. MPC noted that while the continued rise in headline inflation remained a significant problem confronting the economy, other macroeconomic variables were moving in the right direction despite observed headwinds. The committee's debate at this meeting therefore was whether to continue its rate hike to further dampen the rising inflation trajectory or hold to observe emerging development and allow for impact of the last 5 rate hikes to permeate the economy. Loosening in the view of the members would gravely undermine the gains so far achieved. Members thus resolved by a majority vote to raise the monetary policy rate MPR by 50 basis points. In summary, 10 members voted to raise MPR by 50 basis points, 1 member voted to raise MPR by 25 basis points, and 1 member voted to hold the MPR. All members voted to keep all other parameters constant. The MPC therefore voted as follows. 1. Raise the MPR to 18%. 2. Retain the asymmetric corridor at plus 100 and minus 500 basis points around the MPR. 3. Retain the CRR at 32.5%. And 4. Retain liquidity ratio at 30%.
Journalists at the MPC briefing pressed the CBN governor for more clarity on issues raised and decisions reached at the March meeting.
Good afternoon, Mr. Governor. Oyeyematu from Business Day. I think my concern is on the uptick in inflation, which we're seeing, and which, of course, you alluded to during your presentation. So, is there any policy options? Are there any measures that the CBN is possibly exploring or looking at to tame inflationary pressures that we're seeing? Seeing that inflation has risen now for 2 consecutive months.
That's what you want to go, right?
Yes, from Business Day. Thank you.
Thank you. My name is Sunday Michael Ogun. I write for Daily Trust newspaper. Mr. Governor, following your acknowledgement of what had happened in the United States with the SBV and the impact in Switzerland, I was wondering, when you said the committee had evaluated and confident it would not have impact on our system, but I would like you to please expatiate on the level of the exposure of Nigeria's financial system, especially startup, to the SBV collapse. Thank you.
The level of Nigeria's exposure to SVB, 0.
Good afternoon, Mr. Governor. I'm Nancy Naji. Good afternoon, members of the MPC. My question is, with the aftermath of the Supreme Court's judgment on the legal tender status of 200 naira, 500 naira, 1,000 naira, and also in light with the bank statements last week, I really like to know what is the state of the country's money supply, vis-a-vis that a lot of Nigerians are still cash squeezed, and we have many failures concerning banking transactions as well as online transactions. Thank you, Governor.
Good afternoon, Governor and MPC members. My name is Biodun Dare from Radio Nigeria. Findings have shown that a lot of people are actually in support of the ideals of the cashless policy, but the problem of seamless network for this connectivity has been a problem, appearing to frustrate this policy. What is the CBN doing to remove this impediment to seamless network for transactions?
Thank you. We have two questions from outside. Bukola Ido of Leadership Newspaper sent this. Governor, sir, the bank in the process of carrying out its campaign on adopting the newly redesigned banknotes also encouraged Nigerians to embrace the e-Naira. What is the adoption rate of the e-Naira thus far? Another question from Babajide Komolafe of Vanguard Newspaper. At a recent conference of central bank governors and financial regulators held in Joburg, South Africa, you were reported to have advised banks to ensure tighter regulations to guard against a run on the banks. Can you take us through the systemic health status of Nigerian banks? Thank you, Governor.
What we saw is that because of the actions that we have taken, the rate of increase in prices, which is inflation, had begun to decelerate. For instance, between April and August, the rate of increase in inflation was about 5%. But between August and even now, the rate of increase in inflation is only about 1.4%, right? Because of the tightening measures that have been adopted by the CBN over this period, which, yes, what one would expect is that because we're tightening, inflation should immediately begin to drop. It doesn't happen that way. What you will find, particularly in our environment, is that as you are tightening and you see, or before you start tightening and you see inflation moving very aggressively, and you begin a policy of tightening, what you want to do first of all is to stem that rate of increase before you begin to see a reduction. Once you achieve the kind of moderation in the rate of increase of inflation, the next thing you're going to begin to see is that it should begin to come down as you continue your tightening policy. The second question talked about we should please try and look at the level of exposure of Nigeria's financial system, especially startups in the SVB. Like I said earlier, immediately this happened last week, we tasked our banking supervision department to ask for the bond portfolios, which is the main area of investment of banks in order to earn some relatively high yield. And the reports that came back to us is that there is no direct investment by Nigerian banks in SVB that could result in a loss of investment there. That's on one part. But on the second part, we began to say, how are we sure that the Nigerian banking system is reasonably insulated to ensure that what happened in the United States does not happen in Nigeria? So we reviewed the various prudential guidelines that were put in place. Nigeria, like I said in my discussion when I went to Joburg, Nigeria, being one of the countries, is one of the countries, or few countries in the world where we have cash reserve deposit requirement. What is cash deposit requirement? It has been there even before I started banking, that when you deposit your money in a bank, a certain percentage of that deposit is held or sterilized at the Central Bank of Nigeria to ensure that when there are kind of liquidity crises, that money is available to that bank for them to use to solve that liquidity problem so that depositors don't lose their money. 2, we also have the liquidity ratio, which is an indices of specified liquid assets against total deposits of banks, either held in cash in bank vaults or bank balances or money at call, treasury bills, OMO bills, and different other liquid instruments. And in Nigeria, our ratio is minimum of 30%. Banks keep above that. Today, liquidity ratio is almost about 43%. Cash reserve, we all know, just like we read, is about 32.5%. The loan deposit ratio, which means that banks are not over trading, is just about 52.47%. But we are happy that in spite of maintaining these prudentials, that the banks still remain profitable. Bukola Sector says that in the process of carrying out the campaign for the adoption of e-Naira, what is the adoption rate of the e-Naira? I can only say that the adoption rate continues to increase and improve, and everything is being done to continue to make sure that this continues to go up. For instance, the e-Naira, the report that we have shows that the e-Naira has emerged as the electronic payment channel of choice for financial inclusion and targeted social intervention programs. Within the last 18 months, when the e-Naira was launched, we recorded over 13 million wallets. And these wallets are categorized based on their level of usage, with 12.6 million at tier 0, 11,354 at tier 1, 367,000 at tier 2, and 9,649 at tier 3. But one notable example of areas where the e-Naira has been adopted, and I think we must thank them, is the Ministry of Humanitarian Affairs and Disaster Management and Social Development, which has expressed keen interest in our e-Naira product. For instance, as on March the 20th, which was just 2 days ago, approximately 4 million wallets were created especially for social intervention payments, representing about 30% of the total wallets created so far. These wallets were created in response to a request from the ministry as part of plans for the next tranche of the conditional cash transfer program, which is scheduled during the second quarter of 2023. That at a recent conference in South Africa, the CBN governors, right, and this asking that I was reported to have advised Nigerian banks to ensure tighter regulations, not just Nigerian banks, banks in general, to guard against a run on the banks. Can you take us through the systemic health status of the Nigerian banking industry? I think I have some data here. Like I said, that we had put in place a couple of prudential guidelines to insulate the Nigerian bank, and that we say and make bold to say that the financial soundness indicators in Nigeria, in the Nigerian banking industry, shows that Nigerian banks remain very, very resilient. Not just resilient, but very, very resilient compared to what we find in other climes.
That's the package from the CBN this week. Report unresolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN Contact Center on the phone line +234 700 2255 226. Local call rates may apply. Write to us through the email address from the cbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch up-to-date episodes of the program. We invite you to join us again next time. I'm William Missy Dada. Stay safe and bye for now.